Welcome back guys to the channel. So today we are looking at a very special topic, and this is going to help you guys maximize your profits in your trading journey. As soon as you master this, you are on your way to the moon. So without wasting any time, keep up to the end of the video. We'll have some really good information you're going to provide on this one. So without wasting any time, let's jump right into it guys. So thanks for keeping up, and this video is going to be about swing trades. So what are swing trades? Swing trades are orders or positions that you open and can run for some good amount of time. They are not orders you will open and close today. They are orders you will open and let them run for some time. So swing trades will always help you maximize your gains and will help you catch up with the losses you make. So for example, we have a very good run right here that went a very good let's say 10 20, that went a very good 300 pips, and we have a very good run that has been going up and down that also went a very good 250 pips. So these are two runs. This took a week, and this has taken close to a month. Now these are two trades that would have been taken, and this would have given you 300 pips, and this would have given 200 pips in a week. So this week you would have gained 300, and this week you would have gained 200. So how do we go about this? Let's see. So every time you come on the charts, first thing, try to allocate where your demand and supply are. As soon as you allocate these two, then try to look for a trend line, break of structures, and wait for a retest to get a good entry on your order or your position. For example, this was in the beginning, this was an upward trend that was broken and retested. So this was a very good entry to the downward side, which created a very good 100 pips, but it was small. This is not the order we are targeting. So we are targeting a very big order. So we are looking at the market structure, and we wait patiently until an opportunity is created. So this took a very good 2 weeks. This range, or this declining triangle, descending triangle, took a very good 2 weeks to break. So this trend line right here was broken with a very huge volume, because this is 4-hour chart, and then it was retested right there. So this was a very good moment to enter your trade and just wait till where this trend will show you some range or pause in the bullish move, and then you exit from there. Or you wait until you see a break of this trend line. So somewhere here, that's where I would have closed this trade, because it was showing you that there is a clear break of trend. This trend line was broken right around there, and that is where you would have closed this entry. Now these positions are always good. These positions will always have a very small risk while we are targeting huge returns. For example, you'll order a small size lot. You have a 10k account, you'll order some 0.2 or 0.3, and they'll give it a stop loss of something like here, let's see, something like 50, which would be 150 USD, and then you'll target something like 200 pips, which will be something like 600 USD. Or you will target the highest high on the chart. Now here the highest high will be 150 pips, which could have made a very good let's see, 150 could have made a very good 450. So that could be easy a 1 to 3 risk return. But as you can see here, the target was broken through with a very huge volume to the upward side, and this could have potentially led to continuations. And in the middle of any trend, as soon as you get a support that is above the previous resistance, you add in another small order. Let's say right here, we're going to put a smiley face. Let's say right here you ordered one order. We are using this just for showing. Let's say there you entered one order right there, and then you saw a retest and a continuation to the upside, whereby here you order the second order, then a retest and a continuation to the upside, and here you place another entry. Now it means here you'll have a 0.3, here is 0.2, here is 0.2, where you'll end up having a 0.7 in one move. And as soon as this move makes a big run, you end up having very good returns on very minimal risk. Let's try to look at a different market structure where the price doesn't shoot in one go. For example, you have your first entry at the break or at the retest, one of these two positions, at the break or at the retest. Which is better? At the retest, which is right here after the close of this red candle. Then you wait for market to run, retest, and after the retest you try to get in another entry. So this is a 4-hour chart. We'll try to jump into the 1 hour. Let's see. So this was our order number 1 where the market retests, and we're going to look for our order number 2. We're going to look for our order number 2. This was order number 1, and then here is where the market breaks again. So we'll get our order number 2 somewhere around here, and then we'll get our order number 3 somewhere around here. So remember guys, we are targeting demand and supply. So when price breaks from this big move to the upward side, we start hoping for a big move to the downward side again to balance the market. So this will be our entry number 1, entry number 2, entry number 3, 0.3, 0.2, 0.2. Again, price breaks, retests below, and we do our entry number 4 right here. Retest and a double top below the support. This shows that this is good resistance at the support zone, which is turning into resistance, and this would be your entry number 4. Now what does this mean? You have 1, 2, 3, 4 entries to the downward side straight from the major supply. Now this 0.3 has something like 20-30 pips stop loss, and as soon as you reach here, this 0.2 will have something also like 20-30 pips entry stop loss. Now this, you move the stop loss a little bit in positive, and then you wait for entry number 3. As soon as you hit entry number 3, all your stop losses will go to entry number 2, and now here you are in the green zone. If price moves and you get entry number 4, now you are in real money, because this will be a 0.3, 0.2, 0.2, 0.2. Now you end up with a 0.9, and right there you get a move that runs straight to 100 pips. And now this is where you get the big bucks. Swing trades, small lots, small risk, you target big gains. This only works when we have a trend, and if we see a range in the market, we wait for the range to break either to the upward side or the downward side, then that's where we place our entries. But other than this, you'll always catch small moves in the market which won't add up to the huge gains you're looking for. But as soon as you start going into the swing trades, adding in on your good trades, you can always end up capitalizing on that market structure to gather up maximum gains, which are going to support you in the long run, and you will always make money in your trading journey. So that was our video about swing trades and capitalizing on long moves in the market to make some really substantial gains. Thanks for watching and keep it up.